December, retail inflation has crossed the 7% threshold. Retail inflation has come in at 7.35%. Remember, this is the highest monthly retail inflation data that we are seeing after 2014. Now, what is worrisome is that vegetable inflation has significantly increased. It has increased by over 60%. We will, of course, have economists to decode what this means for our economy. Remember, we are also witnessing a period of lower demand and a situation where everyone is concerned about our GDP figures. But we also have inflation that is spiking and significantly spiking at that. Remember, last month inflation came at 5.5%. Economists across the board were expecting inflation to come in over 6%, but over a 7% retail inflation figure is a shocker for them as well. We have Mr. Madan Sabnawis joining us on the phone line, Chief Economist at CARE Ratings. Mr. Madan, what do you make of the December inflation data?
See, the number has come definitely much higher than what we had expected. And I think it has been caused by just one single component, vegetables, which have shown an increase of 60.5%. And this has been because of the onion inflation, which has been plaguing our economy for the last couple of months. But I would tend to believe that this is going to ease off in the month of January, and we could have probably more hospitable numbers as we go into January and February.
Right. Various economists as well as the likes of citizens like us are concerned, sir. Is India going through a period of stagflation where we have rising inflation and we have a lower demand growth?
See, what you're talking of stagflation is technically probably this will not qualify as stagflation, because when we talk of stagflation, economists normally refer to negative GDP growth and high inflation. And here we have a situation where inflation is definitely high and GDP growth has slowed down. So while I couldn't call it stagflation, it's definitely a major problem for us because growth is not taking place and inflation is going up, which is creating problems also on the monetary policy front. So definitely it's a difficult situation to be in.
It's a difficult situation to be in. You see vegetable prices previous month, which were over 30% and have now come in over 60%. So what do you see vegetable prices? How do you see them panning going forward, Mr. Sabnawis?
So I would tend to believe that prices would moderate in the month of January. We have already seen onion prices in the market have come down. We were paying something like 80 to 100 rupees a kilo in the month of December. And today, at least in a place like Mumbai, we are getting it between 50 and 70 rupees. So definitely there has been a bit of cooling down of prices. And this is because of the arrival of the onion crop, because we had a crop which was destroyed on account of the monsoons getting prolonged. And that has affected the prices for around 2 to 2.5 months. And now from January onwards, as the new crop comes in, we could expect prices to moderate to a substantial extent. And therefore, this number of 7% should definitely not get repeated in the month of January.
All right. So you're saying that, and what do you see the RBI's next move on February 6th?
I think the RBI would probably take a pause because of two reasons. One is because we have seen this high inflation number for the last 3 months above the 4% mark. And the other part is, of course, in terms of the uncertainty concerning the fiscal deficit. So, of course, the RBI will have the budget which would have been presented on the 1st when they take a decision on the 6th. But to my mind, I think given the kind of pressures which are there on the fiscal side and inflation being where it is, the RBI would probably take a pause for one more time.
All right. And so for our viewers to understand, core inflation has also inched higher. Core inflation is, of course, inflation that doesn't take into account fuel and food. So, Mr. Sabnawis, what do you make of that?
In fact, core inflation is something which is directly under the purview of credit policy. And the fact that it has inched upwards, it's not really very significant, but 3.5 to 3.7% is definitely in the upward direction. So that is something which would be of some concern to the RBI again, and that would be another reason why the RBI would probably take a pause, because inflation is high, even though food inflation will come down. Core inflation moving upwards is not a good sign because you're going closer towards the 4% mark, which has been targeted by the RBI.
All right, we've had weakening IIP, we've had inflation that has now significantly risen, we've had worries across the board about our GDP data. So, just ahead of the budget, what would you suggest the government looks into? What measures really are crucial for us to take now?
So in fact, today, given the fact that the RBI have already announced a number of sector-specific measures, the RBI has lowered the rates by 135 basis points. I think what we're all looking forward to is whether whether the government will go in for any kind of a fiscal stimulus. Now, from the point of view of households, I think people will be expecting that there will be certain benefits given on income tax. So that's the only area of taxation which has not been touched so far. And the second would be any additional expenditure on infrastructure, which could be at the expense of the fiscal deficit going higher than what was projected earlier, let's say 3.3%, maybe something for 2021 in the region of around 4%. That is something which could help to revive the economy.
All right, that could help revive the economy. But so far, it's a bleak scenario. We have bleak data points coming out each day. And, as an economist yourself and someone who's widely respected, what is your tip and what is your, vision that you see in the near term? What is your short-term goal that you feel that must be fixed?
No, I think the important thing is for us to create more jobs, because the problem has been on the demand side. And since the private sector is not in a position to invest because the financial system has its own issues which have yet to be sorted out, as well as the fact that the private sector is not really has surplus capacity, is not really interested in investing, I think the onus is really on the government to bring about this additional spending. So when we talk about fiscal stimulus and the government starts spending, there will be a virtuous backward chain which gets linked to other industries and also helps to create more jobs. But it's going to be a very slow and gradual process this entire year. And I think we'll be sort of struggling to move towards the 6% GDP growth mark in 2021. I don't think it's going to be an easy way up there.
All right, so the most upbeat figure you're coming up with and projecting on NDTV is 6% for GDP. And many would say that that itself is a disappointing and a bleak scenario. So, how does one reassure investors alike? How does one reassure citizens who are concerned? And what is your message to everyone?
No, I think the only assurance which is there is that, A, the government has done a lot in terms of the policies to make sure that wherever there are problems, they are being addressed by appropriate measures. But they obviously take time before they really fructify and really bring about the benefits. So whatever was done since August 2019, we'll have to wait for the effects to come out in 2021 and probably 21-22. It'll take 2 years at least for that. And for the short term, I think what we are really looking out are some kind of benefits for the households in terms of income tax cuts, which could probably increase our incomes, increase our spending abilities. So I wouldn't bet too much on it, because we cannot really give away that much and also maintain hygiene in terms of the fiscal numbers. So everything is going to be very, very gradualist. And as far as an outside investors are concerned, I think what one should look at, the intrinsic strength of the economy, which is definitely there. We have a lot of scope for higher investment. We just need to get all these problems which have been there for the last couple of years to be sorted out. The NPA issue, the IBC issue, the slack in terms of infrastructure, government being a bit too prudent in terms of its fiscal. I think all these things, some kind of improvements in these particular points will definitely help to move the economy forward. But again, I would say very, very gradually in the coming years.
All right. Thank you so much for joining us, Mr. Madan Sabnawis, Chief Economist at CARE Ratings, telling us that one will have to be patient and he hopes to see a recovery, gradually, as gradual as maybe 2 years from now. However, remember, with each negative data point coming in day after day for our economy, it is, of course, worrisome. And, of course, inflation data now, December monthly inflation data now coming at its highest since the month in 2014 is, of course, very, very worrisome. Remember, vegetable prices have spiked this, in particular onion prices, and we'll only have to wait and watch and see what really happens for our economy in the days and months ahead.